Welcome to weekly view on markets. Nifty gained 1.15% during this week. All indices ended the week in the green with gains. Small cap sector outperformed during this week as per our discussion in the previous week. I had discussed that since the results of small cap companies were very good during last quarter, further upside will be there in the small cap sector, and that is what exactly has. I have looked at charts, and charts indicate further upside in the market in the coming week. Investors should remain invested and should not book profit early. Any dip in the market is a good buying opportunity. Market is eagerly awaiting the next Fed meeting in the US, where there will be a interest rate cut followed by RBI meeting on policy rates, and we can expect a rate cut in the RBI policy meeting also. And if these cuts are announced, we will see a rally in the markets further. That is the reason I am telling investors to remain invested. Let us look at indices levels. Nifty closed at 24,823 with a gain of 282 points. That is a gain of 1.15%. Bank Nifty closed at 50,933 with a gain of 416 points. Mid-cap index closed at 58,555. It gained about 1.56%. Small cap index closed at 19,079 and it gained 3.48%. That is 642 points. India Wix has cooled off. It is at 13.55. Now let us look at different sectors. Only one sector, that is realty sector, was down by 2.91%. Remaining all sectors have seen buying and have gone up, ended in the green. That shows that the overall sentiment in the market has improved and there is all round buying in different sectors. Metals have gained the most with 3.30%, consumer durable 3.16%, PSU banks, commodities gained more than 2%, FMCG, pharma, healthcare, energy, infra, oil and gas all gained between 1 to 2%. Auto sector gained about 0.99%. Private banks gained about 0.98%. Information technology has gained about 0.52%. Now let us look at technical charts. This is the daily chart of Nifty. Here we can see I have drawn the line from the big drop during the election results announcement. From here, if we connect, this is forming a medium term trend line. And as long as Nifty remains above this trend line, my view on Nifty is positive. We will see further upside. This is the chart of Nifty mid cap index. Here also I have drawn the support line, which is at around 58,000. As long as Nifty mid cap index remains above this, I have a positive view. And by looking at the charts, I feel that Nifty mid cap index may consolidate at around the present level for a few more days. This is the chart of Nifty small cap index. Small cap index has good support at around 18,500 levels, and it is likely to touch the previous high and cross the previous high of around 19,079. And Nifty small cap index might touch newer highs in the coming week. This is the chart of Bank Nifty index. Bank Nifty index is likely to trade in the range which is 50,400 and 51,500 range. And if it crosses this range, we'll see further rally in the Bank Nifty. Now let us look at economic and market fundamentals. Macroeconomic fundamentals of Indian economy continues to remain strong. RBI forex reserves has touched 674.66 billion. It is the highest level and it is up by 3.81 billion dollars during this week. Forex rate is at 83.89 per US dollar and dollar index has cooled down. It is at 100.68. So this shows that the overall demand for dollars globally has come down as dollar index has cooled off. Brent crude price is at 79.02 per barrel. So if the crude price remains steady at around these levels, it is good for Indian economy. It will help to stabilize the inflation and inflation may come down further. We had a good monsoon season and this will help to bring down food prices and vegetable prices, which are the main cause of inflation in India. If that happens, then we may expect for a rate cut in the next RBI policy meeting. Gold price is studied at around 71,770 for 10 grams 24 carat. FIIs have sold 1,608 crores in equity. The FII selling has been coming down substantially. They used to sell around 6 to 8,000 crores in every week earlier. Now, this week, they have sold only 1,608 crores, and on few days they have bought also. DIIs continue to buy. They have bought 13,020 crores in equity during this week. The DII buying is giving a good support to the market. Despite the FII selling, the market is not going down because it is supported by DII buying. Market is happy with the Jerome Powell's statement. 3 days back, the Fed chairman Jerome Powell has made a statement in US where he has told that inflation is likely to come down to the level of around 2% in US. It has been coming down, and this has given an indication that the rate cut may be there in the next Fed meeting. And market is very happy with this announcement. After that, we have seen a big rally in US markets. Subsequently, we have seen the rally in the Indian market also. And RBI also may cut interest rate if the rate is cut by Fed in the next meeting. So markets are expecting a rate cut. That is why we see the rally in the market during this week and across the board buying in all sectors. So these are good times to come by, and Indian macroeconomic fundamentals are quite strong. The GDP growth in India is quite good. It will be at around 7% for the whole financial year. So because of all these things, investors should remain invested and they will get good returns in coming quarters and in coming months. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions, which I will reply. We'll meet again next week. Thank you.